NIO next generation all-new cheapest electric car shocks the entire car industry. NIO stock will explode. NIO and BYD won the hearts and wallets of Chinese consumers with sleek, smart electric vehicles, and they've already built a following among U.S. investors. Longer term, they could become the biggest challengers to Tesla and traditional automakers as the industry shifts to an all-electric future. But now comes the real test, winning car buyers abroad. Today we're going to talk all about why NIO is shocking the entire car industry with next-gen cars and global expansion as to gain investors' trust. Hi NIO stock lovers, welcome to NIO Stock Live, your daily dose of NIO stocks. If you're interested in everything around the NIO stock, this is the place for you. Make sure to hit the like button and subscribe for us to provide you with more NIO stock news. Now let's get back to our topic. US-listed NIO and BYD, two of the best-known China EV makers, are ramping up in Europe in a huge way after starting sales in Norway in 2021. BYD presented 3 all-electric models for the European market at a virtual event on September 28th, and NIO is set for a similar event October 7th. A host of other Chinese car companies, virtually unknown in the West, are taking on beloved auto brands like Volkswagen, BMW, and Mercedes-Benz, as well as global EV giant Tesla. Chinese automakers, for the first time, feel ready to establish themselves globally, said Michael Dunn, CEO of auto consultancy ZozoGo. There's reason for confidence. Sales are surging of electric cars made in China by homegrown companies. Chinese cars are now held up for masterful integration of hardware, software, and EV technology, rather than mocked for poor build quality. China EV makers see huge opportunity. Other reasons exist to venture out. EV startups like NIO, XPeng, and Li Auto especially have an eye on capital markets for new funds, which they need to sustain operations over the coming years. They're young companies and not quite there yet, Dunn told Investors Business Daily. Funding tells the story. We're going global and we're globally competitive. Why Europe? Overall, Europe is the world's third largest market for auto sales after China and the US, shipping nearly 12 million vehicles in 2021. About 2.3 million of those were EVs, including all electrics and plug-in hybrids, making the region the world's second largest market for EV sales after China. BYD, the largest seller of EVs in China and the world's largest seller of EVs and plug-in hybrids, aims to sell 4 million vehicles in 2023, at least doubling this year's estimated total. To do so, it has to gain a real foothold in Europe. For Chinese EV makers generally, Europe is a huge opportunity. Not only is Europe the number 2 market for electric vehicles, it has more room to grow than China, and competition is less insane. Unlike the US, which imposes prohibitive tariffs on Chinese autos, Europe is relatively open to Chinese imports. Lower Chinese labor costs offset much of the cost of shipping to the continent. The rollout is not without challenges. NIO CEO William Li told the Financial Times Tuesday that soaring energy prices are slowing its expansion and the rollout of battery swap stations across Europe. Crippling energy costs and other challenges seem to be pushing Europe into a recession. That could weigh on demand for autos, especially pricey electric vehicles. NIO BYD lead China EV push into Europe. The year ahead will be a litmus test for Chinese EV companies' global bet. They're taking their latest and greatest models to Europe. They're going on roadshows to impress EV buyers and investors. On Wednesday, Warren Buffett-backed BYD unveiled its lineup of fully electric models for Europe. The Atto 3 Han and Tang EVs, with delivery starting in October. The Atto 3 will start at €38,000, $37,200, while the Han and Tang begin at €72,000. Those are significantly higher than in China. BYD appears to be trying to establish a premium reputation in Europe. NIO will hold a similar unveiling October 7th in Berlin, with its co-founders making a European road trip this month in, what else? A NIO electric car. On October 12th, Polestar will reveal the Polestar 3 electric SUV in Copenhagen. Polestar is co-owned by China's Geely and Sweden's Volvo, which itself is controlled by Geely. But most Chinese car makers have no brand recognition or prior experience in most of the continent, and Europeans, Germans in particular, are deeply loyal to brands like Volkswagen, BMW, Mercedes-Benz, and Audi. It's tough going. They have to persuade consumers to part with their money and trust these Chinese brands, which are still relatively unknown, Dunn said. American, Japanese, and Korean car makers have struggled to crack the European market. General Motors exited Europe in 2017 after years of losses, while Ford has shrunk its footprint in the region. It's a difficult market for new players to enter, said Deutsche Bank analyst Edison Yu. Tesla may be the exception to the rule. Volkswagen versus Tesla in European car market. The European auto market encompasses 18 Western European countries, including the EU member states before the 2004 enlargement, plus Norway, Iceland, and Switzerland, and the UK. Tesla ruled the EV markets there in 2019, then lost sway. In 2021, its European EV market share fell to 14%, about equal with Fiat, Peugeot, and Chrysler parent Stellantis, and well behind Volkswagen Group's 25% share, according to Schmidt Automotive Research. With a new Berlin plant that opened in March and is slowly ramping up, Tesla could regain ground. But right now, Tesla is struggling for third place versus Honda Kia, with BMW and the Renault-Nissan-Mitsubishi alliance not too far behind. Amid the EV transition in Europe, Korea's Hyundai Kia has gained share with compelling new products like the Ioniq 5, a purpose-built electric vehicle. Traditional auto incumbents are shifting to electric vehicles, but much of their business remains tied to gas and diesel cars for now, making them a less daunting target for China's EV makers. China EV makers growing in Europe. To date, China-made electric vehicles have just scratched the surface of the European market. Led by Geely and SAIC, China's EV makers sold 37,700 all-electric vehicles in Europe over the first 7 months of 2022, growing their share to 5% according to Schmidt, a Berlin-based firm. Geely's Polestar 2 and SAIC's MG brand accounted for almost 9 in 10 of those sales. The rest was made up by companies like BYD, FAW Group, NIO, XPeng, and Aways, which sold above 1,000 units or mere hundreds of units each. Some have called that a slow or even disappointing start, but analysts who spoke to IBD took a nuanced view. They said a slow ramp was expected. China's EV makers faced supply disruptions due to COVID lockdowns in their country. They're starting to build dealer networks in Europe. They're bringing their best EVs over, but there isn't a major hole to fill. For NIO, with its premium branding, Yu doesn't expect tremendous sales anytime soon. It's much more about cultivating the brand than pushing out as much volume as possible, he said. In fact, Chinese startups have said they see Europe as a long game, anticipating a decade for any payoff. They can afford to wait. Both Beijing and the China auto industry are aligned in a desire for global EV domination. Look for China to pull out all the stops to win overseas, Zozogo's Dunn said. As an example, he mentioned government subsidies to keep factories running. China EV sales in Europe. Sales of all-electric vehicles, also known as battery electric vehicles or BEVs, in Western Europe totaled 812,000 during the first 8 months of 2022, Schmidt Automotive Research finds. Total new passenger car sales reached 6.46 million units in the same period. The firm projects all-electric or BEV sales of 1.4 million to 1.5 million units in the region for the full year, up from 1.2 million in 2021 and making up 1 in 7 overall new car sales in 2022. Schmidt expects a big push from China's EV makers, helping them overcome a slow start to 2022. For the full year, the firm expects their sales in Europe to reach 80 to 90,000 all-electric vehicles. Chinese OEMs told Schmidt they expect an uptake in deliveries as supply headwinds ease. Both NIO and XPeng have expanded production capacity in China. BYD, which has vastly boosted actual production in 2022, could increase its share dramatically if it delivers more models to a larger number of markets in Europe. Volume brands like BYD are teaming up with local dealers, which could offer more of an opportunity to drive sales, according to Schmidt. In contrast, premium brands are going with direct sales to consumers, but offer other novel perks such as clubby NIO houses and battery swap stations. Third quarter. Well, that's it for today's video, guys. Also, we would like to mention that this is not a channel intended specifically to provide financial advice, and we do not ask you to invest in any company. This is merely a channel directed towards bringing educational content to your doorsteps. With that in mind, before you invest in anything, we recommend you do thorough, wide-spectrum research on the topic, and make sure to subscribe and give us a thumbs up. See you next time on NEO Stock Live. Bye!